Hello everybody, welcome to the Technical Analysis webinar with AvaTrade. My name is Troy. I'll be presenting this evening. As we're getting started, let's do a quick systems check if you would. Type OK in the chat box if you're hearing me clearly and seeing my screen all right. All right, great, thank you. I have enough responses. Looks like we're up and running fine. If anyone has any issues as we go along, please feel free to let me know. As we get going, some things to keep in mind. No one trade is guaranteed to profit. Each and every trade that you take obviously has risk. The other side of that is each and every trade that you take also has a potential for nice profits as well. So we want to go about things in a way that makes sense from a risk standpoint for your account, your risk tolerance, your trade size that you prefer, etc. And at the same time, what we go over, keep in mind, is meant to be educational in nature and is not to be considered financial advisement. Now, the technical analysis that we're going to look at today obviously is being affected by the global developments and the tensions surrounding the war between Russia and the Ukraine, and all of the related connected links to what's going on there in terms of the financial markets, crude oil, sanctions, etc. So what we'll see is that there are a lot of large movements on many of the charts, some of it very predictable, and even the movements that maybe aren't predictable lend themselves high potential for potential profits. Obviously, you want to manage things on the risk side. So we're going to be taking a look at the driving storylines, the driving headlines, and the technical analysis on instruments that are strongly related to what's going on, like crude oil, gold, major indices, etc. And also the cryptocurrencies for those of you that are in an area where you can trade cryptocurrencies with us. The cryptocurrencies have been acting as somewhat of a safe haven today, it seems, as many are fearful about the value of their currency, and largely maybe the Russian population, potentially with the ruble having problems with all of the sanctions, and maybe many in the stock market worried and looking for safe havens. So gold has been bullish, cryptocurrencies have been bullish. And we'll take a look at what's been happening on the charts, and I think you'll get an easy read as to what's been happening and why. And so we're going to be using some manual methods of technical analysis. On days like today, indicators aren't necessarily going to give you the best predictions, because when something is said to be overbought by an indicator, it's a lot of times the indicators are telling you to sell. But with what's happening today, for example, crude oil just kept climbing, and gold could be doing similar type movements and the opposite direction for many of the indices, etc. So we'll take a look at some of the headlines, and then we'll unwrap the technical analysis as well. Some of the headlines coming in: financial stocks hammer Wall Street as Ukraine crisis escalates. We see that the futures were in the red all day. The market opened in the red in the US. European stocks have been in the red, etc. Volatility index way up all day. US dollar strengthening again against a basket of other currencies. And so US dollar acting as somewhat of a safe haven, similar to gold right now and the cryptocurrencies. If we take a look at European shares, also sinking on the Ukraine jitters and some weak earnings numbers that came in. Next headline: global risks cloud Fed's policy pivot as Powell heads to Congress. So what was presumed to be a given before all of this war situation broke out was that the U.S. was going to raise interest rates 4 or maybe 5 times this year, that the first increase could be as much as 0.5% increase in the federal interest rate, maybe cutting back on the bond buying program, other stimulus measures, etc. And so markets were jittery about how quickly would the U.S. Taper their stimulus measures and raise interest rates. And now the question is, will they raise interest rates at all this first quarter or anytime soon? Because of what's going on with the war, it may have changed the plans of the Feds in the U.S. in terms of the timing of raising interest rates and cutting back on the bond buying program, et cetera. So there's a lot of doubt right now and indecision on the markets. And usually when there's uncertainty on the markets, this leads to selling. And that's what we see today. And that's what we've seen since this crisis really came in, with some bounces back up in between. But overall, when we look at the larger picture on the charts, we're going to see a bearish type movement has been created. And so when there's uncertainty, the markets don't like it. Safe havens are usually where folks go, and that's what we've seen of late. Oil jumps over 10%, and you'd say, well, why is oil going up? All of this could slow economic development and movement, all of these sanctions on Russia and all the tension around the world. Maybe it's not good for the economies. Why would oil go up if demand might go down? And it's the fact that Russia is a huge supplier of crude oil and natural gas and other products to the world. And so there's fears that Russia's energy sector could be sanctioned, could be blocked from selling, or nations may just voluntarily say they're not going to buy from them. And so the fears of a disruption of the supply of energy is causing prices to shoot up. And that's why with this type of crisis, even if it's a negative impact on economic demand partially, it's still because of the supply worries in this type of situation. There's this effect of creating an increase in price, bullishness on crude oil and the energy sector in general. So that's what we're looking at on the energy sector. And obviously Russia's economy specifically, and I don't think we can even trade on the ruble right now with us because of the situation. The volatility was just too high. But the Russians are scrambling for hard currency. This headline says. Other headlines I've seen, many are buying into the cryptocurrencies to get out of the traditional banking system as the banks are being sanctioned. Many of the banks in Russia now have been sanctioned. The SWIFT system sanctioned. Quite a bit of ability for transactions for Russians and Russian businesses and people. So this is creating quite a scramble in Russia and creating some unique demands maybe for cryptocurrencies right now as well. So that brings us to looking at the technical analysis. Quite a fundamental news situation. And I know it's a technical analysis webinar, but the technical movements are always related to what's going on fundamentally. There's always some connection between the technical movements and the fundamental news. So it's good to understand the fundamentals as you get into the technical analysis. So what we can do then, let's take a look on the app. I'll expand my view to full screen. Take a look on the mobile app. Let's jump right into, I'm going to skip the market buzz, which are headlines on stocks. I can show you where it is. This is a fundamental news tool. Market buzz, you tap on it. It's stock focused, and it brings up headlines right there at your fingertips from the top stocks that are trending. And so no surprise, there's something about banks in the first group that we see, but we see the name of different stocks, and if you tap on that stock name, it'll bring up articles related to those stocks, and literally there are hundreds of articles within this system that come up for each stock. And so it's an easy way, without having to search for all the articles yourself, to find information on specific stocks. And there may be some that are quite predictable with what's happening right now globally. Let's take a look at the Analyst Views. This is an advanced feature that gives you Forex and crypto signals and breaks down the technical analysis for you. Okay, so we see GBP USD expected to drop. And as we go through these signals, without even analyzing the technical analysis, we can understand fundamentally why that technical signal is coming in from Trading Central, why they're telling us that would be the expectation. GBP going down against the USD. We know the USD is strengthening as a safe haven currency. Ripple up against the US dollar. Even though the US dollar is strengthening today, has been strengthening anyways, cryptocurrencies are going up. Ripple, Litecoin, up against the US dollar, and up against the euro, up at whatever you pair it against, really. And why? It's acting as an even stronger safe haven to get out of the traditional banking system. Who knows, maybe for some of these oligarchs that are afraid their money is being sanctioned and taken away. So there could be money literally in the millions and billions flowing into these different cryptocurrencies for that reason, and maybe other fear reasons too, just in general, from average folks about the banking system, specifically in Russia, but also maybe in other areas. As we take a look then, dollar index expected to rise. There's Ethereum expected to go up against the US dollar, Bitcoin up against the US dollar. All of these signals, by the way, if you look at the charts, every single one of them has been right, I think, today, at least at one point or another, depending on your entry point and exit point. But if you consistently did your technical analysis, waiting for breakthroughs of resistance levels or support levels, timing it with proper entry and exits, you had a lot of opportunity for potential profits here, while being able to limit your risk in case your entry point wasn't timed properly. And so let's take a look at some of these. And you never want to say each signal, all the signals are going to be right. I don't mean to give that impression, but many of these signals today have been dead on as we look. And the reason why signals can be so accurate many times is because you take into account the fundamental news, then you look for the technical entry point. Okay, so if we want to take a look at GBP USD, you see the signal, you see the preferred direction, our preference. And by our preference, I don't mean AvaTrade, I mean Trading Central's analysts' preference. Short positions below $1.3435 with targets at $1.3340 and $1.3310. Okay, that's a good number of pips. 34.35 down to 33.40. We're talking a large move there, 100 pips or more. Potential profit to those take profits. And so we can take a look at GBP USD and some of these other signals and see, did they approach the next support level? You see why the take profits are analyzed, are recommended as well. They're saying resistance is up here. It's not expected to break above this resistance. If it does, then they say no good. Signal's no good. That's how you read these signals. It gives you the blue line is the kind of the line that says if it goes beyond that, then the signal's no good in the preferred direction. Preferred direction here, they say sell with take profits at these prices. If the movement went above this line, then they say buy, because something must have changed. If a headline came out that said truce reached, Russians pulling back troops, if that type of headline came, that's why they have this resistance level showing that if the movement broke above this price, then they say the signal's no good, because any signal is acknowledging that the news can change, that the fundamental news can change. And if it does, then it might make sense to have your stop loss just beyond an important price level like this resistance level, because if it broke back above there, then something changed fundamentally, most likely. And so then they say probably you should buy if the price does break above this blue line with your take profits up here at the green line. So the way these technical signals are set up for you in both our web trader and AvaGo mobile app is so that the technical analysis with resistance and support levels are outlined for you. It gives you the preferred direction and preferred take profit prices based on the current fundamental news and the way the support and resistance levels line up. And then it gives you a backup move that you could put a pending order, that if the price came above this blue line, then you could have a pending order to buy with take profits up at these resistance levels up here. Okay, so each signal breaks down the technical analysis for a market move and for a backup pending order. Okay, good question. Gulfheim, you're asking who are the analysts that are providing these signals? It's Trading Central. And you can go, you can find them online, you can find the website. Trading Central has even, I think, a paid service. You can sign up, but we cover that cost for our traders. For Trading Central, for all live accounts anyways, I think even on demo accounts, these signals are available. And we think it's worth it to give this information, even if it costs AvaTrade a little something, because improved traders are happy traders. And we hope the information helps as much as possible to keep you trading with us and as successful as possible. So this is the way these signals are outlined. You even have the RSI, the moving average, showing you some indicators as well along with it. Okay. So what we can do is get on the full screen view. I'll get off the app here. And everything you see in the app is available on the web trader, and everything on the web trader is in the app. So if I start showing you Ava Protect, that's also in the app in the order window. Or if I show you in the order window on the web trader here, by logging in here, you're in the web trader. When we look in the order window and we see that it acts as a trade calculator in the order window, calculating your potential loss to your stop loss for you before you ever place the trade. Calculating your potential profit for you before you place the trade based on your trade size and the distance to your take profit and stop loss. That risk management stuff is important, and it's taken care of for you to do those calculations within the order window of our app and also the order window of the web trader here. Mohammed, the news can change in a second. So you're asking, how long is this information good for? I think you're talking about the signals. And very good question. And so the signals, when you look at them, they're time-stamped. But it doesn't mean that if the signal came in as a timestamp from an hour or 2 hours ago that it's no good. As we were looking, when you open that signal, like we were looking at the GBP USD, that blue line was there to show you if it went above that price, then they're saying the sell signal's no good anymore. So it's not really based on time, whether the signal is still good. It's based on where is the price? Where is that movement? And I personally would do exactly what we did prior to looking at those signals. Do a quick review of the headlines. What's the most recent fundamental news? And only go with the signals that you agree with fundamentally make sense. And then check the entry point and see if it's still at a price that's good for you. You know, if it's just below that blue line on the GBP USD and the fundamentals still show the USD is strengthening, then you'd say, wow, that's a good entry point to sell from. But if you look at GBP USD and you say, it already got down to their suggested take profit lines, then you'd say, okay, maybe that's not the entry point I want on that signal because it already made the movement and went to the take profit. Or maybe you look at it and it reversed and went above the blue line and you say, oh, I better check the headline. Something changed fundamentally. So in that case, your pending order would have already triggered if it broke above that blue line. In that GBP USD example, your pending buy would have already bought with your stop loss right below the blue line then, if you're buying. So obviously in that initial move, the sell that's recommended in that signal, the closer to the blue line you are, the less you have to risk to your stop loss, right? The less distance to get above that blue line with your stop loss. And so you obviously prefer it to be closer to that blue line to enter, but it doesn't have to be. If we analyze GBP USD right now and see, hey, it's downtrending still, even if it's a ways away from that blue line, you might say, hey, it's still confirming a downtrend on the small candles. And so even if it's not a perfect entry point, you might still say, hey, I like this move. So let's look at the GBP USD. And you might say, well, why is the pound having so much trouble? Or why would the euro have so much trouble against the USD? you understand that, Russia's a lot closer to the European Union and to Great Britain than it is to the continental United States in terms of direct potential military contact. And then you look at the dependence on Russia for natural gas, for crude oil, and a lot of these European nations are a lot more dependent upon Russia than the US is. The US not that long ago was energy independent under Trump. Now the Biden administration came in, increased regulations again, cut down on giving permits for drilling, for fracking, for natural gas, etc. The Keystone Pipeline alone that Biden shut down coming down out of Canada would have provided something like 800,000 barrels per day, and the U.S. buys 500,000 barrels per day from Russia right now still. So even with all of this going on, the U.S. is buying crude oil from Russia, but not at the level of some of the other nations, the European Union nations. And so with this potential conflict escalating to where maybe there's conflict between the European Union nations, the US and Russia, not just Ukraine and Russia, if it disrupts supply coming from Russia into the European Union, let's say, or UK, then that's going to hurt those economies maybe more than the US. The US has the ability to be self-sufficient, maybe not immediately, but more so than many of these European Union nations in the UK. And so we see the USD acting as somewhat of a safe haven in this situation, and fears of more economic effect on the European Union, GBP, etc. Okay, and so that's kind of the fundamentals here. USD acting more as a safe haven than other currencies, and that's why we saw the US dollar index going up. It's going up against not just one other currency, but a basket of other currencies within the US dollar index. So we're looking here then at GBP USD, and it's a plunge. Okay, the pound is dropping against the US dollar rapidly. These are 1 hour candles, and we see it going down. You had multiple opportunities here to sell. Okay, this in the past week, resistance down, resistance down, resistance down, resistance down, resistance, and look at the plunge just today. From the same resistance level, this was an easy sell, folks. The technical analysis is there. When you understand the fundamentals, then it's easy to sell from this resistance level and take your profit down at the low points. So what we're looking at here is the signal that we looked at, the GBP USD signal, obviously was a winner. We see it already dropped. 1, 2, 3. If you'd have looked at that signal 4 hours ago, or even looked at the chart yourself and understood the fundamental situation, this was an easy sell 4 hours ago. Okay, go back 1, 2, 3 or 4 hours ago, it was up at 134. And now it's down at 133.07, past those take profit marks. The take profit suggestions, if you remember, were right about here, like 133.30, something like that, was right at this support level here. And you see why the signal was recommending you take profit at that price, because there's a support level here. Now it broke it. It broke that support level, and now we have to go to larger candles to decide, would you still want to sell on this or not? Here's the next support level on the 4 hour candles. It's down here. Okay, we have to go to 1 day candles even to get to the next support level. Okay, there's the end of the wick on the 1 day candles. So we're talking the next support level is here, 132.73. So we're talking another 40 pips or so down before it hits the bottom of this wick. Okay, now you might say you don't like that entry point, and I would understand that, right? The bulk of the drop from the last resistance level up here, that 134.31, it's 80% of the way down. It's almost 80 anyways, maybe 70% of the way down from this resistance to the next major support level. So maybe this particular move, you would prefer to wait to see if it bounces back up before you get in, but that's not for me to tell you. You might say, listen, this is an unusual circumstance, and if the US dollar is strengthening this rapidly, maybe you just go with it and sell. Okay, that's up to you if that's how you feel. But we can see the technical analysis. We can see why the signal was there. And had you looked at those signals a couple hours ago, you could be way in the profit on this particular move. And I would be willing to bet if we look at any of those other signals, you're going to see something similar. Those signals were right on today, really moving quickly. The trick is timing, okay? And right now, is it the right timing? Maybe, maybe not, okay? Depends on your perspective. If you're looking at 1 week candles and you're more of a long-term trader, you might say, yeah, the timing's okay for me, because maybe you're looking at a take profit down here. On the 1 week candles, the support level's down here, okay? 131.78. We're talking, what, 140 pips down to the 1 week candle supports. So perhaps this is such a strong momentum, and the war's not going to end anytime soon, most likely. This tension's going to be there. You might be comfortable selling, even though it's not the best entry point, and having a take profit just before the 1 week candles. Okay, just before the support level on the 1 week candles. And that's up to you. And you can protect it with AvaProtect if you want. Okay, so this is maybe a good example of when you might use AvaProtect. You say the fundamentals are on my side. The entry point's not great though. So you're worried about using a stop loss because it could bounce back pretty rapidly. So maybe you say, okay, I want to sell on this, but I'm going to use AvaProtect. So let me pick sell. Let me use AvaProtect because I don't like my entry point exactly, but I don't want to miss it in this example. So I'm going to sell now instead of putting a pending order up higher, because maybe I'm thinking maybe it won't bounce back up. It's that serious of an issue globally. So perhaps this fear just stays. And so let's pretend that's your opinion. And I'm not saying it has to be, but let's pretend that's your opinion, that this is going to test the 1 week candle support. So then I could say take profit, 131.85, let's say. That's just before that support, which is at 131.78. So 131.85 or 131, let's even go 90, okay? And then we say AvaProtect, I'm going to protect for, I don't know, 2 days. Let's give it 2 full days. Now I've got time. Even if it goes the wrong way, I'm only out what I pay for the premium. And I can wait all the way until this expiration time without having any other risk. So if it bounces the wrong way, 100 pips in the first day, first 12 hours, no problem. I can wait. I don't have any further risk but my premium. And if after 2 days, then it comes flying the right way, great. I didn't have to hit a stop loss, 30 pips away or something. I was able to wait it out without worrying about risking anything more during the protected time period. And the reason I say this might be a good time to use AvaProtect, because there's a lot of volatility. It could swing the wrong way, but also the fundamental news maybe is strongly predictable right now. And so if you feel that way, then maybe using AvaProtect makes sense in this circumstance. And so now I start to say, well, how much do I want to risk? And maybe I say I'm willing to pay 1% of my balance for the protection. Okay, so let me program a trade size that risks. Let's pretend my balance is, I don't know, 50,000. If my balance is 50,000, what's 1%? 500. Okay, so let's say I'm willing to risk 500. So let me see what one lot would be. One lot, AvaProtect costs me 468. That's almost 500. Let's say 1.1. That's 515. So 1.05, 1.07. There, 501. Okay, approximately 500. I'm not saying you should risk 500. The point is, have in mind the amount you want to risk per trade or for a particular move, and don't guess what trade size it will be. And you don't have to manually calculate your exposure to your stop loss or the cost of the protection. It calculates everything for you. So here's my potential profit with that trade size, over $1,200. And by the way, it calculates it to your account currency, and I'm paying a quarter of that for the shot at this win. Okay, and I can manually close it early. Let's say I'm 800 in profit. And I say, okay, it's halfway there. I'll manually close it. I'll take my 800 profit. I paid 500 for the protection. Okay, I'm up 300. And if it goes flying the wrong way, 200 pips because some news changes that gets rid of all the fear on the markets, then I'm only down that 1% or whatever amount I paid for the premium. Okay. So I've got it set up. If I'm comfortable with the premium cost, and again, if you have 1,000 in your account, then maybe you don't like a premium of 500. Obviously, you'd have a smaller trade size. The premium relative to your balance can be very small. And in my example, if I had a balance of 50,000, this would be 1% risk, okay, or 1% payment, I should say, approximately, for the premium. Okay, so now I can say, okay, sell. There, it's a market move. I'm in on a sell. It's not the greatest entry point because, boy, it's crashed a lot already. But when I look at the 1 week candles, and really when you're looking at big global news like this, sometimes you get a better picture if you look at the larger candles and you realize, okay, it's a late entry point when I look at 5-minute candles or 1 hour candles. But when I look at 1 week candles, I see it's a huge downtrend. And I see that the major support level is down over 100 pips away from where it is now. Something would have to change fundamentally, you might think in your mind, for this whole thing to reverse and stop dropping, okay? And so just an example of how to use our risk management tools. Okay, Goldfame, you said you missed the explanation of AvaProtect. Basically, based on your trade size and the instrument that you're protecting, there's a premium cost. You pay that out of your balance when you open the trade with AvaProtect. That payment is, it's like you bought something, it's gone, okay? Now you have protection though on your trade for that small cost with unlimited potential for profit. And during the protected time period, no risk of loss from the movement, okay? And so if it finishes, I don't care if the pound jumps 500 pips the wrong direction during that covered time period. When the protection ends, whatever the negative floating is gets added to my account from the protection and the trade keeps running. Or if I get stopped out before the protection ends, whatever my negative was on that trade gets added back from the protection. And I can reopen then. And I'm only down the premium, which is a small percentage, depending on the trade size you're working with and your balance. And so during times of high volatility, your potential profit maybe is much larger and the premium costs maybe didn't go up much. High volatility, the premiums go up a bit, but maybe not as much as the potential profit goes up in this type of circumstance where you could have a huge run with the USD strengthening like it's been, okay? And by the way, you can think the opposite. You can say, I'd rather buy. I think it'll go running back up and protect it in case it goes down further. I'm not telling you you have to sell, but just as an example, we're using the fundamental news to back up our decision that maybe selling here makes sense. And then acknowledging that, hey, things could change. So we're using some sort of risk management. And rather than using a stop loss, which you could use, we're using an example where we're using AvaProtect. And the advantage of AvaProtect would be, with a stop loss, you're risking, the further you put that stop loss away, you're risking more. And it forces you maybe to take a smaller trade size if you put your stop loss a long distance away. And during high volatile times like now, it easily could spike the wrong way, 50 pips or something, then come back the right way. And so within a couple days, you could easily hit your stop loss and then it goes the right way. And you say, man, if I had just used AvaProtect, I could have stayed with it for those 2 days and eventually it went the right way. And I wouldn't have had to put a stop loss during that protected time period. So that's kind of the advantage that you can find with AvaProtect. But obviously the movement needs to move enough to overcome the premium cost, right? In order to have an overall profit. And so when you look at your open positions, you can see if it has the gold shield, it means it's protected, okay? And you can click on the position to see the details and it'll show you how much time is left. You see it's ticking down. Remaining protection time, 44 hours and 25 minutes, okay? Everything's there for you. Very simple, very straightforward way to protect your moves. Let's take a look at gold. Gold is obviously as a safe haven during times of high fear, during times of fear of inflation specifically. It's an inflationary safe haven. We all know inflation's been rampant on many products, groceries, crude oil, which obviously makes gasoline cost way up, natural gas costs, automobiles, houses, you name it. Costs have been rising faster than incomes in most areas on many products. And now add in inflation fears now on crude oil. Crude oil breaking above 100, 105 a barrel today. And you understand why there could be a further rush into an inflationary safe haven like gold. Okay, so let me just get rid of the order window so we have a larger screen, and maybe I get rid of some of my numerous trend lines that I've drawn in support levels. We don't need so much stuff. We'll draw new lines. Okay, delete, delete, delete. I'll leave the lower one and the upper one maybe. Okay, so I'm on 1 week candles. Let's go to like 2 hour candles. Okay, guys, this was predictable today. Number one safe haven in the world when there's inflation fears is gold. We looked at this last week. We talked about it also, that if the move broke above, and this was before the main war broke out, we said if gold breaks above this resistance level that we were looking at here, at the time it was still down here. We said if gold breaks above this resistance, you see the wicks on the 2 hour candles here, and so the movement was down here someplace. Okay, last week down here, not reaching that resistance level up there. And if you go to 1 day, 1 week candles, you'll see the resistance back further. Today, even if you go back 4 hours, you can say, wow, I see resistance, recent resistance, and a breakthrough. This just happened 2 hours ago or 4 hours ago. These are 2 hour candles. So go back 2 hours and go back 4 hours, you're below this resistance. Okay, that goes back to last week. So and you could say maybe you drew the resistance here, okay, from last week's resistance, or if you drew it more recently this morning, your resistance was here. But either way, once it broke above the resistance, it didn't stop. That's a classic example where a pending order, traditional buy stop pending order on our web trader, you don't have to call it a buy stop. You just say buy from price. If you had put a pending order above this resistance, once it broke through, it would have triggered the buy. Why would you program to buy from a higher price? It seems counterintuitive. You're waiting for confirmation of an uptrend. That's the idea of programming to buy from a higher price. And so it broke this resistance and up it went. Okay, another $15 already, past that. Now you say, well, is it too late? If you're bullish on gold, is it too late to buy? And the answer is no, it's not. What could you do with this? We could say, okay, let's say you want to buy on gold. First of all, you can protect it with AvaProtect. You could put up to 2 days protection. You could buy on this if you think gold's on its way to 2,000 again. And I'm not saying you have to think that. You could sell on gold. If you think it's overbought and it's going to come down, you can use the same idea, but in the other direction. Right now, the fundamentals, fear of rising prices on crude oil, it seems like there's a push towards gold right now. If that's how you feel that you want to buy or sell, you pick the direction. You can protect it with AvaProtect for a couple days even, and go after the price that you think it'll go to. Let's say you easily think it could reach 2,000. And if you look at the chart, it's been, if we go to 1 week candles and scroll back, you see gold was up at 2,036, 2,040, right back here on these 1 week candles, not that long ago. Okay, so that's the next resistance level, up around 240, 250. Okay, and so that's on the 1 week candles. So as we look at this, on the 1 week candles, and we say, wow, this resistance here on the 1 week candles, now it broke through, it becomes potentially support. And then you're looking, could it go up to 2,000? The question might be, could it go up to 2,050, which is the top of this wick approximately? Okay, so it's broken this resistance on the 1 week candle. So then you might say, okay, I want to buy on gold, then go with the momentum, go with the fear that's on the markets, or you can sell. Again, I'm not here to tell you which way to trade, but the strategy concept is what's important here, and the risk management ideas. So let's say I want to buy, take profit. I'm in this case, I'm not being greedy. I'm not going for the top of this wick at 2,050 or 60. I'm saying if it even reaches 2,000, I'll take profit, let's say. Okay. So this example, I programmed take profit 2,000 per ounce. I put 2 days protection. And now I say, okay, if I'm willing to pay, I don't know, 500 again for the protection, what kind of trade can I take? There's one lot. That costs me 1,200. So maybe I go 0.4 lots. That costs me just under 500. So maybe I'm comfortable with that. Approximately 500 cost on the protection. I have 2 days to wait this out. So if there's in a short-term news that makes gold come back down, I'm not risking anything more than the premium cost, and I can wait 2 days with fully protected and wait and see if it goes my way. Okay. Unfortunately, fear could be pretty high for some time. And so what's driving gold up to break this resistance level that it already broke potentially could continue, unfortunately. So if that's what I like, then, or if that's what you like, then that's a move you could make. And again, when we looked at the 2-hour candles or the 1-hour candles, we say, wow, we're late to the game here. It's already broken the resistance. It went up another $15 past the resistance on the 2-hour candles. But when we look at the 1 week candles, which is what I was saying we looked at last week, we drew this line on the 1 week candles last week, or 1 day candles, and said if it breaks above there, it might not stop till 2,000 or higher up at this resistance. And so it came to fruition. If you put the pending orders we talked about last week, you'd already be about $15 in profit per ounce. But it's not too late to get in. If you think this will go up, you can buy. If you think it'll pull back, sell. Obviously, we're talking about buying in this simulation because of the fundamental news and because it just broke the resistance. And that's a technical strategy. When the resistance breaks, it tends to act as support, because whatever caused it to break through the resistance, that news, if it still exists, then causes it to stay above that resistance. So the resistance becomes support because of the fundamental news. And so there's the breakthrough. Now, you could do traditional move as well. And what I mean is you don't have to use AvaProtect. You could just say, you know what, I'll put my stop loss below this support level. It only has to be about $20 down to be below the support. And I'll only have to risk whatever it is to my stop loss. So I could do 2 moves. Okay, let's do the same trade size, 0.4, stop loss, $20 down, 19.18, let's say. But you see the possible loss is double what the protection cost almost. So with my stop loss down below this support level, I have to risk for that same trade size almost double what the premium cost for the protection for 2 days. So it's up to you which way you want to handle that. David, so you're asking with AvaProtect, if the movement goes the wrong way, do you have to manually close it? What I would suggest, you could do it in different ways, but what I would suggest is be aware of when your protection ends, okay? I click on information, I can check and say, okay, my protection is ending in this amount of time. Let's say it's down to only a couple hours left. I only have 2 or 3 hours left on my protection. Now maybe I add a stop loss below whatever support level I see right below. So as it gets closer to expiring, then maybe I could either manually close it, take the payment on the protection if I think now to go back up, then open a new position. You get what I'm saying? or you could add a stop loss as it's getting near the end of the protection time so that you're protected with a stop loss after that. The reason you might not put the stop loss in at the beginning of the protection is maybe you don't want it to hit the stop loss, then go the right way, and you don't have a chance to open another trade, and now you miss out on maybe a big run in the right direction. So, but there are different ways to handle that. And manually closing before the protection is over, you collect any negative floating as a payment. So let's pretend this movement was going the wrong way and it dropped to a support level that you like, but you still have a full day protection left. You might say, wow, I really think it'll go up now. So you could close the trade, take the payment from the protection for any negative floating, then open a new trade and put a stop loss below that support level. Yeah, David, you can add a stop loss later. Absolutely. And if you get stopped out, you get the payment. If you get stopped out during the protected time period. If the protected time period ends and the trade is still running and it's in the negative, you get a payment for the negative and the trade keeps running. If you manually close it at any time, any negative floating, you get a payment and you can reopen a new trade then with protection again or with a stop loss, however you want to handle it. What I've seen sometimes is if the move does go the wrong way and it's dropping and you say, wow, now it's at a new support level that I really think it won't break, before it has a chance to go back up, you can take the payment on the negative floating and open a new trade. So now if it goes back up, you're making double basically. You got paid for the negative floating and you get paid on all the climb on the second position if it goes the right way. Whereas if you left the protection on the first trade and it went back up the right way, if it goes into the positive, well, then you don't get any negative payment from the protection if it closes in the positive. So you could take advantage of a payment, even if you think now it's going to go the right way before the protection's over. You can close the trade, collect on the protection, open a new trade, and then let it run the right way, hopefully. So there are different strategies you can think about with this protection that you can use. There are different ways to utilize it. Okay, let's take a look at crude oil maybe. I think it's an important one with what's going on right now. It's a huge deal what's happening with crude oil. Look at that climb. We're up above 100 still, 103.95. And you start to say, well, where's the resistance? We look at 1 week candles and we say, wow, there is no resistance. That's how long it's been since the price of crude oil has been this high. Here's 1 month candles. Where's the resistance? We don't have enough data to show back far enough on the 1 month candles since the price has been this high. Okay, so we're clear of any recent resistance, even on the 1 month candles. So now you start to say, okay, maybe I wait for strategic pullbacks to buy. Okay, if you want to buy. If you think good news is going to come, there's going to be a truce, then maybe you short oil. Because certainly oil would drop right back down if the news reversed itself. I'm not saying you have to buy on crude oil. But again, I'm basing decisions right now in this simulation on what is the current fundamental news. Okay, and you can put pending orders in case an important price level breaks. For example, if the price drops below 100, it's a nice round number, right? 100. If the price drops back below this support level, which was resistance. Here's 100, resistance, back down. Then here's the breakthrough candle. It broke through, again, a pending order above this resistance. Boom, you'd be way in profit. $4 per barrel up. Blew right through 100 once it broke through. That's a classic breakthrough candle. You could add a pending order right above 100, just waiting to buy. Boom, when it broke above 100, up it went. Easy profit. Now what you could be saying is, if I don't like the price right now, I'll put a pending order right here just above 100, say at 101 or 175 cents. If it pulls back to here, I'll buy. Then I only have to put my stop loss about $1 down to get below that support level. And the potential profit, you could plan to take profit up near the high that it already reached. Let's say at 105. Approximately. Okay, so maybe a little patience is due If you don't have any reference for where's the resistance, well, we look at the most recent movement. Now we have resistance here. If this pulls back down, here's our support level just above 100. So you might put a pending order that if it pulls back to 100, buy. Then have your stop loss at a spot that makes sense for your risk tolerance and the trade size you take. You could have your stop loss $10 down if you want, $5 down, $1 down. It depends on the size trade you take and how much you want to risk, right? But the strategy is there. We know the direction of the fundamentals right now. The wind is blowing up on crude oil. Now it's about timing. What price do you want to get in and what price do you want to get out? And many times then you're looking at the old resistance level when it's an uptrend for it to pull back to the new support level. So I could say execute when price hits. And by the way, you see AvaProtect's not available on crude oil. It's only available on FX pairings and gold and silver, currently anyways. It might expand in the future. So execute when price hits. I've got my strategy. I think it might pull back down near 100. So I say 100.75. Stop loss, let's say I want to risk $2. So 98.75 to my stop loss. Whoops. 98.75 to the stop loss. Take profit, I said just before the high that it already reached. So 105. $105. Okay, potential profit more than double the risk. Potential profit 212, risk 100. Now I say, okay, I'm willing to risk 500 in my fictitious example. So then I say, okay, 0.5 lot size, I would risk 1,000. So 0.25, there's my risk of 500. Potential profit over 1,000. So there we are, buy. Now it didn't buy yet. That's a pending order. You see it's listed as an order, not as a position. So if the price comes down to my trigger price, 100.75, it will buy. And you notice I didn't have to call it a buy limit. That's what that is, by the way. Buying from a lower price is a buy limit. But on our web trader platform and on our app, you just have to tell it the price you want to buy from. It'll make it the right type of pending order. You don't have to get into the technical. Is it a buy stop, buy limit, sell stop, sell limit? The web trader and AvaGo app simplify that for you. So we can see how simple it is to trade the technical analysis based on the price levels, but in the direction that you believe the fundamental news gives you an advantage. And again, when you're watching these webinars, just because I believe the fundamental news gives an advantage in a certain direction doesn't mean that has to be your belief. But the important thing is the strategy concept. Whatever it is that you do believe, whatever direction you believe the fundamental news is pushing a particular instrument, then now you go in and you use these strategies of support and resistance, breakthrough moves with pending orders above or below a certain price to buy or sell, and then also pullback moves like the one we just looked at to wait for a pullback if you don't like the current price, if you think it's due to pull back before continuing in the direction that it already went. So some different strategies you guys can work on implementing into your trading strategies, and also some risk management tools that I think some of you maybe weren't familiar with that can be really helpful when you trade on your MT4 and MT5 accounts using the web trader platform and the AvaTrade Go mobile app. Mendert, let's say you forgot about your trade and you're asking if your protection ends, could you then end up paying for the protection and have loss on the trade? And the answer is yes. You have to manage that trade once the protection ends. Okay. Now, let's say it finished in profit. The trade was in profit and the protection ended. You could lose that profit if you don't close it, if you don't have a take profit, if you don't move a stop loss up, etc. GoFime, I do like the Fibonacci retracements. It's a very nice tool, and the reason I like it is because basically those are major support and resistance levels, and they tend to line up. If you manually scope out the support and resistance like we just did, then add the Fibonacci retracement tool, they tend to match where you already drew your support and resistance levels. And what I like to do personally is once I draw the lines, if I add the Fibonacci tools, then I'll only trust the support and resistance levels where they match. If my line doesn't match the Fibonacci, then I give it less credit. If the Fibonacci doesn't match my line, I give it less credit. But in the spots where my hand-drawn support or resistance level matches the Fibonacci level, then I say, there's agreement here. So you can start to build a trading strategy like that, where you, whether it's the Fibonacci tool or Bollinger Bands or whatever indicator you're using, where you understand the charts because you're doing the lines manually, and you understand the fundamentals behind why those support and resistance lines formed, why the breakthrough movements occurred. And so when you understand how to read the chart and understand why those movements occurred, like we just did, now add the indicator on and see which areas are backed up by the indicator. So now you have a checklist. Check the news like we did, the headlines, pick the direction you think the preferred direction should be. Then do your technical analysis, draw your support and resistance. Then add your RSI or your Bollinger Bands or your Fibonacci. And that's the last thing maybe on your checklist to make sure those agree with you. And so then if your fundamental news agrees with your hand-drawn technical analysis, trend lines and support lines and resistance lines, and then also the indicator agrees with you, now maybe you act on your trade. Henry, I'm sorry, I mentioned cryptocurrencies that we might have time to look. We've run out of time, but the Bitcoin specifically being the #1 name brand really that people know for cryptocurrencies, it went up even more than some of the altcoins that tend to move in larger amounts faster, because it was viewed as a safe haven by many, as the banking system, largely in Russia, is being sanctioned. And the stock markets are dropping, and people are scared maybe of the traditional banking system. You can understand specifically Russians, and maybe some of these billionaire oligarchs are trying to put their money somewhere maybe where it can't be traced as easy, or where it won't be tied to the traditional banking system anyways. And up went some of these cryptocurrencies in a large way. NASDAQ, S&P 500, I see some requests. Again, we're out of time, but basically they're moving the opposite of gold and crude oil. You can use the same strategies we just looked at, but in the opposite direction. Those major indices, as gold and crude oil have been flying up, the fear of what's going on in the markets, there's been sell-off on those. All right, everybody. Thank you for all the questions. Yeah, David, there are a number of presenters and webinars that are done. I tend to lean more on manual technical analysis because it forces you to read the candles yourselves and understand the formations. There are other presenters that may lean more on adding in indicators. On occasion, I'll add an indicator. If you would have requested one earlier, we could have added it on to see where it was in agreement maybe with what we already thought. But in general, yeah, we have a large variety of presenters and webinars. Check out some of the other presenters as well, if you want to look maybe at some other ideas and strategies also. All right, everybody, thank you for joining. Good luck with your trading. Just be careful with the risk side, the risk management. Use some of the tools maybe that we went over to protect you on the downside, and go after the moves that make sense to you.